Today on Money Talk, an update on investment markets, new data on U.S. jobless claims, why is the market climbing higher despite massive economic uncertainty, and last, a customized wealth building tip based on your COVID lockdown experience. But first, I want to extend an invitation to our Father's Day virtual whiskey mixology class. It will be held Thursday, June 18th from 5:30 to 6:30 p.m. and we'll be live streaming an exciting whiskey recipe hosted by Stranahan's, a Colorado-based distillery. Go to denverwealthmanagement.com/events for more information. It's going to be awesome. In U.S. markets, the NASDAQ is a broad market investment index that has a focus on technology companies. From February 19th to March 23rd, the NASDAQ 100 plummeted more than 30%. Since then, however, the index has skyrocketed more than 40% to today's close of 9,615, approaching all-time highs. Jobless claims data is worse than forecast. The Labor Department said approximately 1.87 million Americans filed for unemployment benefits last week, topping a Dow Jones estimate of 1.7 million. Continuing jobless claims rose sharply, nearly reaching 21.5 million. Many clients have been calling in with the question, how can the markets justify going so much higher given the economic uncertainty? Denver Wealth Management has concluded that there's two very important data points causing the U.S. stock market to continue to go higher. The first is that the Federal Reserve and the U.S. government have been pumping money into businesses and into the consumers' pockets throughout the coronavirus crisis. In fact, in America, incomes went up substantially in April despite the lockdown, largely because of we call them Trump bucks, but because of the stimulus check that went out to Americans. The second thing we're thinking, and when we read the data and listen to other investors, is there are a lot of investors who have just basically written off 2020 earnings and are completely looking at 2020 market earnings to price stocks. So what that means is usually the stock market looks at the earnings of the next 12 months and bases their price of the stock market based on that number. Well, because we know the next few quarters are going to be very difficult for U.S. companies, many investors are just looking farther ahead and judging the value of the market based on 2021 earnings. If you base your investment on that number, the stock market isn't as high as it seems. And last of all, a wealth building tip. Americans spent 13.6% less in April based on a Wall Street Journal data poll that came out just this week. That means most of you and most of our clients here had some areas of their life that they spent substantially less than they usually would. We think it's a very good time to look at your spending, especially in April and May, and see where you cut down. If the things that you cut out didn't negatively affect your life that much, that might be something you want to consider continuing to stop or slow down spending on as we come out of the coronavirus, whether it was restaurants or bars or travel. If there was anything that you didn't spend money on in April and it didn't decrease the quality of your life, that may be one place that you can save more in your budget and potentially, or spend less in your budget and potentially save more.